Welcome to our August market update. We're now at the midpoint of August, and Canada's housing market continues to send mixed signals. While activity remains softer than during the strongest periods of the housing boom, there are some encouraging signs emerging across the economy and real estate market. Here are 5 key trends Canadians should be watching as we head into the second half of August. First, Canadians still expect home prices to rise over the next year. Optimism is strongest in Saskatchewan and Quebec, while buyers in British Columbia are expecting prices to remain relatively flat. The key takeaway? Canada doesn't have one single housing market. Local employment, population growth, supply, and affordability can create very different conditions from one province or city to another. So, national headlines don't always tell the full story. Second, Canada's immigration reset may not immediately reduce housing demand. Permanent resident targets are falling, but several one-time initiatives are expected to keep admissions elevated in the near term. That means the impact on housing demand may not be as immediate as the headline numbers suggest. Population growth remains an important driver of housing demand, particularly in communities where rental and ownership supply is already limited. Third, consumer confidence is still low, but there may finally be a reason for some optimism. Canadian consumer confidence recorded its strongest monthly rebound in more than 3 years in July. It's too early to call this a major turnaround, but improving confidence could be an early sign that sentiment is beginning to stabilize. And confidence matters. Canadians are more likely to make major financial decisions when they feel secure about their income, employment, and financial future. Fourth, Canada's housing supply is changing. Rental construction continues to surge, while single-family construction is moving in the opposite direction. More rental construction could eventually provide additional options for Canadians looking to rent. But there's another side to the story. If fewer single-family homes are being built, ownership supply could become tighter over time, especially in communities where demand for detached and ground-oriented homes remains strong. What's being built today could have a major impact on the housing market several years from now. Finally, what recession? After a weak start to 2026, early indicators are pointing toward a potentially strong rebound in Canadian economic growth during the second quarter. If that strength holds, some of the recession concerns that dominated earlier this year may have been premature. That doesn't mean Canada's economic challenges have disappeared. Canadians are still dealing with affordability pressures, and economic conditions can change quickly. But stronger economic growth could provide some much-needed stability for households and businesses. So, what does all of this mean for homebuyers and homeowners? The mid-August market is a reminder that there isn't one simple story when it comes to Canadian real estate. Home prices, interest rates, immigration, construction, consumer confidence, and economic growth are all moving at different speeds. Instead of simply asking, "What is the market doing?" the better question is, "What does the market mean for me?" Your mortgage strategy should be based on your goals, financial situation, and the opportunities available in your local market, not just the latest headline. Whether you're buying a home, approaching a mortgage renewal, considering a refinance, or looking to access your home equity, understanding your options early can help you make a more informed decision. At Cashin Mortgages, we work closely with borrowers to find mortgage solutions that match their financial goals. With access to banks, alternative lenders, and private financing, we can structure solutions for many different scenarios. We're here to help you make smart moves every step of the way. Thanks for watching, and don't forget to check back for next month's market update.